Hello everyone, good morning. It's actually midnight, but still, it's a good morning because we just entered a new day, right? Okay, so I want to share something that I'll be sharing with the community, and it's actually something that we've been doing since this month. We always have our sessions on Sunday night before the market opens. So the reason why we always do that is that we always project what the week we deliver to us for that day for that week. So we always doing this all the time, and I noticed that it helps the community improve in their analysis. So on Sunday after the session, posted analysis on EURUSD that we will continue the bullish trend on EURUSD. Other activations that has been done, starting from this first rectangle right here and moving upwards, we've been having sessions on this, and all of them have been playing out, and I always share the setup to them. So and I can actually see massive growth from that, because having a community is very important where everyone has to share an idea and also have the opportunity to understand things that they don't seem to understand. So share that on Monday after the session on Sunday, shared it on Monday, and we got triggered right here at the 4-hour old block, and we are approaching this area of buy stop, this area of buy stop, and we are looking forward to see if we go for the buy stops resting on this high, which is the month of December, and that is for EURUSD. Now this projection it helps you to understand how the candlesticks are formed, how the weekly, the daily candlesticks are formed, and you can use that to project where the price wants to go to. Use that to understand your growth in the range. You can actually see that last week was bullish. Alright, now after the bullish move, we continued this week, and the first thing we did was we traded lower into this buy side inefficiency, and then continued to go higher. If you go down to the daily time frame, we're going to actually see that we are printing series of bullish trend. Now I want to move over to another broker to break this down. Alright, so we'll be using FXCM for nope, I don't like this because of I saw this right here, so I'm switching. I also saw similar thing on Oranda, so not using Oranda. Let me check capital. I think they're all similar. I prefer forex.com. Alright, so nevertheless, let me take up the drawings. Yeah, so I also did share GBP on the WhatsApp community channel. There is a channel, you can have a channel on WhatsApp. So I also share GBP on the WhatsApp channel, and here's a delivery. We are almost getting close to the take profit, which is this low right here where we have the sell stops. So took a shot from there, and we see that massive drop down. So let's just go back to EURUSD. That is just the one that I had interest to explain, because that is always the pair that we always focused on. So now we are moving to our daily time frame. You can start off from the monthly time frame if you want to, because that is how it always looks like, but I choose to start off from the daily time frame. But nevertheless, let me just break it down in the way that you have to understand. Alright, so right here on EURUSD, we have been ranging, and then finally last year dropped in a bearish move. Now looking at this, and if I have to mark the range that we are dealing with throughout last year, we are actually dealing inside this range high and this range low. That is the external high and the external low. That is also area, so we're having key resistance and key support. That is our major resistance, major support. All right, so we have been inside that swing high and that swing low. So price was kind of like showing like we wanted to go to the high, but did not actually do that. And then what you actually did was it swept an internal liquidity right there, then finally dropped down. Now when it dropped down, what it did was that it took out the internal liquidity low, so stop, and finally took the external, the major low right there. Now what it actually did right here was a sweep. Now for those who have been in the mentorship or have my, only because I always talk about a break of a consolidating market is not a structural break, all right, is a liquidity grab. The reason why it is called liquidity grab because that is an area where you have in liquidity pools. So what do you think the algorithm wants to do? We want to go there to start buying those sell orders. All right, so that is what we experienced right here. Trade to take those liquidity resting below an area of support. Okay, not a break of structure. So now we have the month of January, and if you look closely, what happened in the month of January was not interesting. We actually closed in a doji candle, which tells you that the market ranged. The month of January, we just ranged. All right. So with this understanding of what happened in the monthly time frame, you can tell that this is a support resistance, this is a dealing range, this is an area that doesn't show you this trending bullish or bearish. It tells you that it is a range because it closed in a doji candle. Now we started our sessions from the month of February because I noticed that is what the community needs. So every Sunday before the market opens, that is when we have our session. All right, so when the market opens on Monday, they follow the step, and I also drop update to like a guideline to what we have to look towards the week. All right, so now dropping down to the daily time frame, this is that previous month high. Yeah, this is the previous month high that we have right here, and this is the previous month low right here. So I think what I'll do is take this off, and I will just indicate that with a dot right there and right here. Or would you prefer the horizontal line? Okay, let's use the horizontal line. Sorry guys, this previous month's high, the month of January, the month of January low, that is the first quarter of 2025, right? The beginning of this year. So who knows how this year candle will end up like. Okay, so January swept December's low, it traded lower, and then it paused, right? And then finally closed for the month. Okay, so let's see where it ended. All right, so January ended at this daily candle that we have right here. All right, so you can actually see that this is a swing point, swing highs and lows. That is a daily range, that is a range. All right, now February opened right there on Monday 3rd. It showed lower. That was the first week. All right, 1 2 3 4 5 6 7. That was the first week. If we go to the weekly time frame, there's it, the first week. So the first week of this month, February, gave us the low of the month. Just like when you look at January, the second week gave us the low of the month. Those who are in the mentorship knows what I meant by, well, knows what I meant, what I meant, sorry, by which week gave us the low and the high of the month, which day gave us the low and the high of the week, and which session gave us the low and the high of the day. Then lower time frames is something that I'm not interested in. Okay, so that is it. So the first week of February opened and it traded lower. Then second week started showing something bullish. Now let's start doing something interesting. This is a high, this is a low. We trade higher to give us this high, right? Which still tells us that we might want to keep looking for a bearish move, right? Because we have not yet shifted bullish. Now the first thing to notice is that, remember, this has been ranging, and this ranging could possibly be an accumulation phase on EURUSD, because when we traded lower we didn't break this low, so there is an internal range, and then we trade higher, give us a high, low high, and if we were expecting to go bearish, we would have seen it trade lower to break this low, but what it did was it gave us a failure, and that is when the second week opened. Now when the second week opened, all you are paying attention into is the areas where we have inefficiency and an area where we have in order blocks. Now on the daily time frame, this is the only area where we have an inefficiency, in which we might be expecting price to sell from that area of fair value gap to validate it to continue going lower. If not, we'll be expecting to go higher, and we'll go for the previous month high. Going down to the 4-hour time frame, this was what we projected on the daily time frame. This is our high of January, this is our low of January, previous month highs and low, right? And February opened right here, it traded lower, did not go for this low, and this was when we started our session for the month of February. And what I explained on the session, I'm not sure I posted it on YouTube. Be more focused on the mentorship. Now what I explained right here was that we traded into an area of sell side inefficiency. If we were expected to sell from here, then we would have seen it trade in a bullish form into the inefficiency, and then from that bullish trend it shifts to a bearish trend. That is when we'll be anticipating to continue selling. But in this case, after we have this low, price trades into the area of sell side inefficiency to balance that inefficiency, and it gave us that high, right? Then give us a low. So this is the high, and this is the higher low, right? So seeing this, it tells you that you are not yet to go bearish, as long as you already still have a bullish trend given to you. Now the interesting part that we shared together was that we're looking at the supply zone also, and what did you see the price did? The price trades into the supply zone and still hunts the high of that supply zone. The high, this candle highs, is a buy stop, because if you look closely, the black candle did not sweep that candle's high, unlike this one. So this black candle swept previous candle's high, which tells you that what it did right here was a stop hunt. It took liquidity, right? So price traced back into it and then sold off. All right, now another interesting part was that this did not break any bullish trend. All right, the interesting thing is for it to go to this low, it did not go there. So since this external low is protected, and then we will not be anticipating it to continue going lower. So we have filled up the area of sell side inefficiency, and we finally violated that supply zone. Now then, what comes into your mind next is what is responsible to violate this supply zone? what is responsible is this area of demand. That is where we have our bullish order block. Now if we go back to the WhatsApp channel, sorry, WhatsApp group, I shared, all right, I also shared this one played out. Sorry, these are not mine. All right, so I shared this. I also shared when price trades into this one. This was what the first session we had. Then the second one was this, and then yeah, so that is it. There's a lot of chat. All right, so this is it right here. Okay, so all right, so this is it right here. But that is by the way. Let's go back to trading view now. Since we have seen that the area of sell side inefficiency has been filled up, a demand was created that was responsible to violate the what's it called, supply zone. So we are looking for that opposing candle that violated its opponent. All right, and that is this demand zone. So what we are now having is this. We have a structural break, call that SB. Put it at the top, put this to 14, and that is okay. Sorry, I need to off my night light so that I can see this clearly. All right. So that is a structural break, violating area sell inefficiency and kicking out this liquidity, right? So what I explained was that we will be paying attention on the day in which this current wick will be formed inside this old block, and if it were Tuesday, then it's a perfect time to get into the market, right? So now most people, and this was the fair value gap on the daily time frame that we talked about, and actually see it was violated also. The same thing occurred right here. We have this high and then we have this low. So that fair value gap is not valid due to the fact that there was no structural shift. Now most people, based on they don't understand this concept, they might see this and call it a break of structure, right? Why will you call this a break of structure when it has not yet violated an opposing trend, right? Or change of character. When it has not yet violated something that is opposing it, it has not violated a bullish trend. So why will you call that a change of character? All right, so you will not call this a change of character as long as this demand still stands. All right, so those who are looking at this based on they didn't understand this concept that I've been teaching on YouTube and the strategy and the analysis, they don't understand, right? And based on they're making the mistakes of not starting the analysis from the higher time frame, they are more focused on the lower time frame. So that is why they were having these kind of issues. They be like they want to scalp, you know, stuff like that, or day trade. But before you have to scalp, before you day trade, also you need to pay attention to what the higher time frame tells you before you get into the market, so that you will not make mistake of when price activates your order, keeps you happy for some time, and then comes back to take your order on the stop loss or a break even. It's not something to keep you happy, right? All right, so we trade into the demand zone right there. Monday opened, nothing serious happened on Monday, right? You can actually see the movement, but the big thing that occurred was on Tuesday. So Tuesday opened, and what it did was it broke Monday's high. That tells me that gives me a confirmation entry because of what it has broke previous this high. All right, so breaks previous this high, give us this high. So now what we have is this high, low, structural shift, high, and then it came back to give us that low. If you use a Fibonacci to project this high and this low, that is around 78 Fibonacci level, right? So price trades into it and then give you another structural confirmation entry. Now, what is that structural confirmation entry? This supply that was trying to oppose the bullish order block or demand has been violated right there, right? So now what we are now having is a new high right here. All right, so let me take this off. So we have this high, we have this low, we trade higher, violates an opposing block, and then we have a new high. Now, what is responsible to violate this supply zone? Because what actually happened was that price trades into it, sells from it, and then bought, sell to buy candle. This is that old block, the sell to buy candle. So this is how you get to understand what an order block means. If you're looking forward to look for a bullish order block, it happens in an area of resistance. No, resistance is an area where you sell. So it trades into the area of resistance, activates traders' orders, right? Keeps them happy, and then goes back to take that orders. So that means the algorithm sold to activate traders and then comes back to take the stop losses, which is depending orders resting above an area of resistance, which are depending by orders. All right, so it goes there and sell to it and then finally buys. This is how it works. All right, so now it trades into the supply zone, activates some traders, and then that is where you see the sell candle. It trades into the favorable gap and it finally bought. All right, so the order block will rest right here. So there's another confirmation entry, and I shared that to the group, and that was for pay attention to the 2-hour time frame, because that is where I saw what I saw and shared it right there. And this right here is an inducement, so that means there is liquidity it needs to take and then trigger the order block. Okay, so that is it right there. Now after that, the next thing he did, you actually see that was done on Wednesday, and this one was Thursday. So each and every day there is a structural break on previous day's high, giving you that bullish structure and then give you a projection of what the bullish candlestick looks like on the weekly candle. Trace higher, give us trace backwards, give us a low. So you can actually see how it started printing bullish structure: high, low, high, low. Then we have a new high. Now this low gave us a break of structure and also violated an opposing trend right here. Now let me take this off. So what is responsible for breaking this high, which is our previous week high? It is this order block. Now this explains why the weekly candlestick continues, why the daily candlesticks continue, why the monthly candlesticks continue after a hunt on previous liquidity. So this is previous week high. It took the previous week high, and if it has to go lower, it needs to violate this. This is responsible to take out this high. That explains an order block. You can actually see sold from a resistance, kicks it out, comes back to it. That is how liquidity sweep is done. That is how purging is done. That explains everything. Okay, so that is the order block responsible to take this high. Price trades into it, and while trading into it, it trades into it with trade line liquidity. For those who trade trade line or channel, stuff like that. So these are liquidity on both sides. So if it has to activate and trigger the buy orders, you need to take the area of support first and then delivers it to the area of resistance. So that is what happened right here. Swept area of support, trace into the order block or the demand zone, and boom, we see that delivery. So targeting this high and also that major high. So we are now delivering the price up to previous month high. That is how you understand the algorithm range. That is how you can be able to predict where the market wants to go to. So now what we are now focusing on is after this high, we will be paying attention, very close attention to this buy stop that's been resting there, because we want to see if it will go for that liquidity right there, right? Because there's nothing there. Now if we were to sell, you would have seen this low, high, low, lower high, and then we now have that failed lower low. So since we haven't that failed lower low, then that, and you're seeing how price is moving backwards into those highs, then that means we will be expecting a structural shift, right? So we want it to go to this high because there's no confirmation of a bearish trend again, and understanding that we did sweep an area of support. So there is, since this is a higher time frame, since the support level is formed on a higher time frame, then that means there is enough and tons of liquidity that the algorithm took, that is trying to buy on the low. So we will see how the yay for 2025 will end if it wants to go for previous year's high. This is how you can be able to project, right? We have hunt previous year's low, previous 12 months low, right? So if we are to expect it to go for that previous 12 month high, we need to see it break previous month high, still continue going higher, break 3 months high, still continue going higher, break 6 months high, still continues higher. It needs to break all of those key resistance that might be able to reject the price. So it needs to break it and make it a weak liquidity, a weak area of highs. So the nearest high that we have is this, which is December, right? So we need to break it a high, and once we break the high, we want it to impulsively go to this high. All right, because all of this are inefficiency, which is not something to look at, but this buy stop right here. So if this high needs to stay protected, then we'll see. But for now, we are not looking forward to that. We are looking at the nearest liquidity for it to go to, which is these two highs that we have right here, just those two. Okay, and we'll see how it goes. All right, guys. So that is it. If you have a question, drop it on your comment section. If you want to have access to the Telegram channel for your lifetime, where you get to participate and enroll for the videos and the updates and stocks analysis I've been posting up there with the mentorship course, and also the Sundays Google Meet session I've been uploading there, then there's a link on the description that you just click and you have access to it. So take care and be safe. See you next time.